Welcome back to the NWR Virtual Healthcare Conference for 2025. Our next presentation today is from Cyclopharm with the ticker CYC, and we're joined by the CFO, Jason Smith, and the CEO and Managing Director, James McBrayer. Cyclopharm is a radiopharmaceutical company servicing the global medical community with a mission to provide nuclear medicine and other clinicians with the ability to provide patient care outcomes. Cyclopharm achieves this through the provision of its core product, Technegas, which is used in functional lung ventilation imaging. Just a reminder to the audience, if you have a question throughout the presentation, please type it in using the Q&A option within Zoom, and we'll get to those at the end of the slides. But to kick off, I'll hand it over to Jason and James for the preso.
Well, thanks very much, Matt and NWR, for the opportunity to share with you an update on where Cyclopharm is in our evolution. We just had a recent announcement last Friday about securing a 5-year VA contract, which reaffirms our confident outlook for Technegas in the US and our ambition to build a leading market share in the world's largest healthcare market. While there's some uncertainty in the US healthcare system at present, this significant contract validates Technegas's superior capabilities in lung imaging, the timelessness of demand, and our ability to execute new sales. Today, we're just going to cover off on the time allotted, an overview of the company, the financials, touch upon our third-party distribution. The main story, I suppose, is our Technegas technology and an update about how our progress is going there, and touch upon the future for our technology in beyond PE. We're best known for diagnosing pulmonary embolism, but the beyond PE applications that we've been investing in and the clinical world have been investigating in is really where we see the true growth of the organization, and then happy to take some questions at the very end. As far as an overview goes, it's important to understand where Cyclopharm operates. Everywhere that you see gold on the screen there is where Technegas is sold. We're in 66 countries around the world. 17 of those 66 countries we're direct in. And when we talk about third-party products, that stands out as an important point. The technology is more relevant today than it ever was. We've seen growth in the applications of Technegas with respect to better imaging cameras, where we've gone from planar imaging, two-dimensional imaging, to three-dimensional imaging, with hybrid imaging, with anatomical references with CT, and AI is really unlocking that future potential. We're well used throughout the world, best known for PE again, but we've had over 5 million patient studies conducted in those 66 countries. And I'll talk briefly a little bit about our business partner products, but we're leveraging off our infrastructure, our sales and service on the ground in those direct markets to drive a nice add-on that we've had put into the business in the last few years. This slide covers a lot of information. I'm not going into detail on that, and I certainly don't want to steal Jason's thunder on some of the numbers. But I just want to point out a few things. 2024 was a significant year for Cyclopharm. That's when we really entered into the US market. And that occurred when we secured the reimbursement funding at mid-year, around July 2024. That's where we started to finally get traction and start navigating through, a very, very complicated approval process in the US. Fortunately for us, we finished the year at 20.6 in the bank, thanks to the support of our shareholders and the capital raising. And we started the year in great form as well, with the announcements of 2 very significant contracts being the largest private supplier of healthcare services and hospitals in the US in January. And then only last Friday, we made mention that the VA has signed a 5-year federal supply agreement with us. And that not only covers the VA, but it also extends to the Department of Defense and the health services in the US as well. Turning to financials, Jason.
So we've just finished our financial year at the end of December. We're a calendar year, and we delivered 27.6 million of revenue, which is up 5% from prior year. And we're pleased to say that is a record sales result in the history of Cyclopharm. For those of you who are just coming up to speed on the Cyclopharm business, we break our business down into two main segments. The first one, Technogas, and our sales revenue in Technogas was up 5% on last year to 15.2 million. And that was off a really strong second half, up 14%, as we start to see those US sales come through into our results. The second part of our business, the third-party distribution, we also saw positive growth, up 4%, and that was up to 12.4 million. That 12.4 million is growing, and it's now representing about 45% of our overall total revenue. So it's serving as a good diversification to our business. But the most imminent near-term growth prospect is within the US, our Technogas business. And we saw revenue in the US in 2024 of 827,000 with a really strong exit momentum. The second half was up 131% over the first half. And importantly, what we saw in the second half was early adoption by key opinion leaders. What we know about the US market is when key opinion leaders adopt new technology, that adoption quickly flows through the rest of the market. Our net loss after tax was 13.2 million. That was higher than last year. Last year did benefit from mainly two abnormal items, an impairment reversal and litigation recoveries. If you were to add back those items, then our net loss increase was 4 million. And that 4 million was all in relation to our direct investment we've been making in the US business this year. And lastly, 20.6 million of cash reserves at the end of December. That's a healthy balance to be going into 2025 with, to help us to continue execute on our growth strategies. In terms of the trading highlights within Technogas, look, we've got two parts within Technogas. We've got the consumables as well as the generator sales. Our consumables are representing the highest percentage mix there within Technogas. It's 72.6% at the moment. That's an increase from last year because the US is now increasing that percentage mix up. We get a far higher average selling price on our consumable sets within the US, which is helping to move that mix up. We sold 55 system sales. They're the generators we sell around the rest of the world compared to 58 in 2023. And on third-party distribution, there's two segments to that business. We've got our capital equipments business. It is a lumpy business. It does go up and down as we complete a lot of those capital equipment projects, and we expect that. But the important part of the third-party business is our consumables and service revenue. It was up 26% year on year. As we've been executing on those capital equipment projects since we started that division back in 2020, we now get the annuity stream, that recurring revenue coming from the consumables and service. And that's representing about close to 80% mix within third party now. Important to sustaining our rest of world Technogas revenue is the maintenance of our regulatory licenses in the 66 countries that we operate in, and those licenses have been maintained in 2024. Over on the right-hand side, look, over the last 3 years, we've been growing on a compounded annual growth rate of 10%, very positive. And it's positive to show that, look, we've got growth across all three of our main operating segments there.
Thanks, Jason. Before we get into the Technogas story, I just want to touch briefly on third-party products overview. Because we have this unique asset, direct marketing into 17 locations of the 66 around the world, we're able to represent other companies much larger than our own in their products in those markets. That's allowed us to build teams on the ground to actually support Technogas and to get closer to our customer. And that is the primary game plan in actually going into those markets as we drive this beyond PE strategy. This is an overview of the third-party products. It's capital equipment, large projects, as Jason mentioned, and that ongoing consumable revenue that, much like Technogas, really drives the sustainability of the business itself. Getting into Technogas, the overview here, Technogas is proven technology. We're in 66 countries around the world, generating revenue in all of those markets. We are the nuclear medicine ventilation imaging agent of choice in the markets in which we've established. We are unlocking the potential given its unique characteristics that I'll talk about a little bit later. And we're driving superior outcomes in comparison to other competing technologies, not only in sensitivity, specificity, accuracy, but also at an exponentially lower radiation dose than CT. And again, our future is in beyond PE applications, and that's being driven by the technology that's being leveraged with Technegas. Now, I could spend hours on the science of Technegas. There's nothing like it in the world. It's very unique. The takeaway on this slide, though, is that anywhere that oxygen is delivered in the body, that's where Technegas is deposited. So we show true functional imaging. It's nanometer size particles that once inhaled, and it only takes a few breaths to administer, very easy for the patient and operationally for the end users. Once it's inhaled, it's deposited all the way throughout the lungs to the alveoli. That's where oxygen is exchanged. So just in the characteristics of Technegas, we show true functional imaging. This is an overview of the technology itself. We're manufacturing still here in Australia. On the left-hand side of the screen is the Technegas system. It's the synthesis module that actually creates the particles for that quick administration to the patient. The middle section is really the revenue driver. In those established markets, that 72.6% of the revenues generated from the consumables. The carbon crucible that you see on the left-hand upper corner of the quadrant is really the magic. That's what's considered to be a pharmaceutical in the US. That's what creates the carbon matrix that surrounds the radionuclide that is inhaled into the patient. And then we have delivery systems of patient administration sets that provide a containment that's very fast and very patient friendly. And again, this ongoing support and service and training, and the interactions that we have with the imaging companies to drive further image analysis with analytical software and AI. Before we go into some of the specifics about Technegas and why it is the imaging agent of choice, I just wanted to touch briefly on the concept of hierarchy of evidence. The hierarchy of evidence, and you'll see throughout my presentation, I'll always reference a clinical paper, a clinical study, numbers that support any claim that we make. And when you think about Technegas, and I challenge you to do a PubMed search or a medical search on the name Technegas, you're going to literally get hundreds and hundreds of responses there, many of which are at that very pinnacle where guidelines, where clinicians have gotten together and reviewed all of the data and recommended Technegas as the agent of choice. We're not going to cover off on all of these items, and if you look at the presentation that was posted yesterday prior to this event, you'll see some additional references that I'll cover off in the appendix section. But speaking of publications, this was a publication that was sent out about mid last year, around July, where it took a survey of 5 major countries that use imaging and how they actually perform their nuclear medicine ventilation imaging agents. This was taken prior to our launch in the US. So outside of the US, where Technegas is already established, Technegas is 85% of the market share. The competitive product, Xenon 133, that's been displaced. And with the techniques that are being able to be applied with Technegas, with its unique characteristics, we change practice and how they actually use the product in the nuclear medicine departments to drive for better clinical outcomes. For example, the SPECT imaging. SPECT imaging is 95% of the techniques outside of the US, where it's only a third in the US. This paper goes even that step further, talking about beyond PE applications and how with Technegas it's likely to change clinical practice in the US. Specific to the US, we always start with our indications for use. This is what the US FDA approved Technegas for. I just want to point out the 2 bullet points there. The second one is what we're best known for in the evaluation of pulmonary embolism when paired with perfusion imaging. That's the VQ. We're the V in the VQ. But the first point, the visualization of pulmonary ventilation, goes across all of respiratory medicine. And the important point to make on that is we don't have to go back to the FDA to get approval for an application with another condition. It virtually allows us to be used in every respiratory condition you can think of. Those of you that follow our story understand this particular site. The majority of diagnosis of pulmonary embolism is primarily done with CT in the US. That's because they don't have Technegas. Right now, there's about a 15% market share that goes to nuclear medicine. We expect in a couple of stages, one, displacing the existing products that are being used in the US, much like we've done in every other market around the world where Technegas is available. And then once established, we expect that we'll be able to start pulling back that CT market back into nuclear medicine because of the clinical superiority, the sensitivity, the specificity, the accuracy, the negative predictive value, the positive predictive value. These are the things that when we compare our product against other technologies that we have to answer for clinicians. And then I guess, again, we know that once we're in the US market, we're going to start to see more and more applications beyond PE, more and more publications. And some of those I've already started to cite in the appendix session. There's already been 3 publications in the US that have been published in the last few months about Technegas. Well, what does the US look like? Well, we're going to periodically give updates about our installations. And I want to make the point, every installation that we make with Technegas equals revenue. To date, at the end of 24, we had 17 installations. That generated $827,000 in revenue last year. We've already hit the ground running. We've got another 7 installations to date. That's generated an additional $543,000 already this year, and we've got another 4 sites being installed next week. The interesting thing about the 543, and this goes to this annuity stream concept, in that half of that is the installation cost of getting Technegas up and running in each one of those new departments that we've already installed with at the beginning of the year. But the other half is recurring revenue from the consumables, the ongoing annuity stream. And this has all been driven too by the pass-through that we were able to achieve mid last year. And I guess, the largest government contract and the largest private health contract that's come through at the beginning of, we haven't even seen the traction really from those new contracts there. But where you see Technegas, it's really the who's who. Jason mentioned the concept of key opinion leaders. If you look on the list there, that we have ticked the box, and that was our primary strategy. They create the momentum as we grow. And from some of the earlier initial installations, we're seeing additional sites being generated from those healthcare groups. These are some of the numbers that drive the modeling for what the US could mean for and will mean for Technegas. There's 3 numbers that you have to kind of remember when modeling. We have a once-off installation fee of $7,000 that gets the installation in and the training with the technologist. We're not selling the Technegas systems in the US, unlike the ones that we referenced earlier in the financial numbers. We're actually placing these numbers in the marketplace and charging an annual fee of $7,000 per annum. Now, the lifespan of these systems are greater than 15 years, but we're having our own service engineers ensure that they're maintained and serviced as and when required. But really, the consumables are the real lifeblood and the real generator of profitability for us in the US. We're selling on a per patient basis, prices around $225 per patient. And we expect that based on those numbers, each individual site, some will be higher, some will be lower, will generate around $70,000 per site. The market in the US is extremely large. Half the world's nuclear medicine departments are in the US. That's about 8,000 nuclear medicine. We're targeting 2,000 of those, and we expect to have 250 to 300 installations up and running by the end of second half next year. These are the three horizons that we look at. Horizon one, the displacement of those existing tracers that are used in the US, like we've done in every other market around the world. Once their technology is in place, we expect to see the CT migrate over into more and more nuclear medicine studies. But it's really the beyond PE that we see the potential for our technology. What does that look like? Well, it's not really blue sky in the sense that there are publications coming when you do that search, and I implore you to do that search. There are already publications out there talking about the vast different indications that could be used with our very, very unique product. And here's just a list of a few of them. Now, the majority of those in the previous slide, we actually didn't have anything to do with the development of them. Those are publications that clinicians have said there may be a use for our Technegas and how they were going to apply it with their patients. But we do invest in research and development, and here's a list of some of the ones that we've invested in most recently. The item 7, the Pronospect in France, that's a multi-center trial, and the unique characteristic about that, while we talk about PE, it's beyond the initial diagnosis of PE, and it's looking at recurrent pulmonary embolism, a very life-threatening condition, and has implications on how long a patient is being treated for their pulmonary embolism. That's a very large study. Again, over 600 patients, 13 locations, and that will be related to patients that were diagnosed either with nuclear medicine or CT. That in and of itself has huge potential implications for the use of our product. You know, in summary, you know, Technegas, when you extract what we've invested in the US, the underlying business is profitable and a growing med tech. We're first in class in every market in which we operate in, and we're continually working on clinical guidelines and IP expansion with our product life. We've been approved in the US, the largest country market in the world, with full reimbursement. We have an annuity stream, a very attractive annuity stream with very high margins in our Technegas consumable. And lastly, through the advent of this new technology that's leveraging off of Technegas, we're seeing applications far beyond in that we're best known for in PE. And I guess I'd like to finish where we started, in that, you know, this new VA contract, the largest private healthcare contract that we were able to secure in January, it just reaffirms our outlook for Technegas in the US. And while there is still some uncertainty in that marketplace, these contracts validate Technegas's superior capabilities in lung imaging, the timeliness and demand, and our ability to execute on new sales. And I'm happy to take some questions now, Matt, if that's all right.
No problem. Thanks very much, James, and Jason as well. Again, if anyone has a question, please feel free to type it in using the function on Zoom. We've got about 5 minutes, so we'll just get through as many as we can. First off, James, what opportunities exist outside of the existing market that you've been focusing on?
Well, I think that really drives to our beyond PE strategy, Matt. I think that's where we see the real growth. In 2017, at the European Respirology Society meeting, the physicians there, they put a white paper out in the Lancet talking about how they need better techniques, better imaging techniques. And some of the interactions that we've been having since then with places like the Hunter the Medical Research Institute up there, with that publication that came out about severe asthma and the use of Technegas with severe asthmatics, is just another example of how our technology is just in its infancy in many ways with the new technology that's available to us.
Very good. Now, a question I know you'll have had a couple of times before, but can you just talk to the so-called Trump effect with tariffs and how that will impact the business?
Well, you know, I think with tariffs, it's an interesting time right now. We've already manufactured and landed 144 systems in the US. So, you know, we've got a head start. So if tariffs do apply to the products that we manufacture, we've already got a nice healthy stock already in the US. That being said, Matt, we've always said along the way that at some stage we're going to have a secondary manufacturing site somewhere in the world, and the US was always up there as a possibility. And if we need to go to that direction, we're going to have a secondary site. It might as well be in the US. So we're not so concerned about tariffs in the near or even in the long-term future for the company.
Thank you. Question from the audience was a bit of a two-pronged one to start with. So what is the current range of market share of Cyclopharm in the PE segment outside of the US market? And do you see potential for significant growth there?
Yeah, so when we talk about the market share outside of the US, that leads back to that paper that was published in July last year. When you exclude the US out of that, we're 85% of the market share in diagnosing pulmonary embolism. So our real growth potential outside the US with that very substantial market share is in the beyond PE applications. And that, I guess, leads to why we decided to go down that route of more direct marketing and sales and service in those countries with our own people on the ground. We don't have to rely on distributors to engage with respiratory physicians, for example, where our traditional market was in nuclear medicine. So our people now that are established there, they're going out and they're starting to promote our product beyond the nuclear medicine physicians that we normally engage with.
And following on from that, the same person's asked, what is holding up full-scale development of the beyond PE segment? Is there any sort of challenges or hurdles there?
Well, for us, it's our background is in clinical medicine, and anytime that you're trying to change clinical practice, you have to have real evidence. When I say the hierarchy of evidence, the lowest one is not even on the list. It's what the CEO says. So we actually have to have clinical evidence, clinical papers, comparative papers that actually can hold up to evaluation if clinical practices are going to be changed. That's why we have been investing in these clinical trials. We're going to be announcing another one coming up very, very soon, another asthma trial, for example, but COPD, asthma, those are probably, when you think about the potential market for Technegas beyond PE, those are two major ones that we're focusing in on and investing in.
Thank you. And probably just one final one is, can you just talk a bit about the makeup of your shareholder register and what it looks like?
We have a lot of very loyal shareholders. I think that's why in some days we probably don't even have a trade. I think people have believed the story and been supporting the story for a very, very long period of time. It's mostly institutional investors. We have a very small but very loyal retail group as well. So I think it's been very stable, our register for many years.
Very good. Well, that's all we've got time for today. But thanks again, James and Jason, for your presentation. And if anyone has any further questions, feel free to get in touch with the team.
Thanks very much.
Thank you.
Thanks again. And thanks to everyone for joining. Next up in 10 minutes from now, we have our investment panel session. So that should be of interest to plenty of people. So look forward to seeing you on there. Thank you.